All right, we're going to go ahead and get started. Today is February 10th, Wednesday. Recording is on. We're going to spend the majority of the class giving you time to work in Zoom Teams on a real company to practice discussing EIC. We'll then debrief it here a little bit later today in class. This is a kind of a dry run to talk through what we're going to be working on next week. Just as a reminder of some upcoming deadlines, next Wednesday, which is, double check here, share screen, is your first team presentation. Under assignments, it's listed as the group project EIC. It's worth 10% of your semester grade. Basically, each team will do a 10-minute PowerPoint presentation. You're going to all do it on the same company and industry, which is General Dynamics and the aerospace and defense industry primarily, but they're in a couple of different segments, so be aware of that. But essentially, there is no write-up. You're just going to turn in the PowerPoint, and all of the screenshots and data associated with the presentation need to be in the PowerPoint. At a minimum, you're going to need the RV markets beta, and you're going to need the industry spread to do competitive advantage, as well as industry attractiveness. Um, but the other piece is that since there is no paper, since you're doing it verbally, you have to talk about all the issues in that PowerPoint 10 minutes. So, two things. Just to be fair to the later teams, because if you're presenting later in the day, you might notice that you forgot to talk about something that the other teams did. So if it's not in your presentation and you talk about it, I won't give you credit for it. Number two, if it is in your presentation and you run out of time, you will also lose points. So again, you're going to be on a timer. You have 10 minutes. If you're in the E and the I and you don't get the C, even if it's in the PowerPoint, you don't talk about it because you ran out of time, you will lose points. So make sure that you're prepared to do that presentation. I'd practice it in advance. It is a team grade. I wouldn't expect the entire team to make that presentation. You can decide who's presenting on behalf of your team, but the whole team needs to prepare the presentation together because it is a team grade and is a team project. So that's what we're going to be doing in class next Wednesday. Any questions about the GD EIC? The other big deadline that's upcoming is this Friday, midnight basically, is the BMC certification. So make sure you complete and submit your screenshots showing 70% for each of the four sections of Bloomberg in the certification. Again, in the assignments, it would have been here. And so you need to show me these four sections with more than 70%. If for some reason you had taken it twice because you didn't get the 70%, then you need to show me screenshots of the second submission with that second umd.edu email address. So again, that is due on Friday. And you can see right now we got about a third of you have completed your BMC certification and at least submitted it. All right. So other than that, the final thing is Monday will be homework 3, and homework 3 will be an EIC on Stanley Black and Decker, ticker symbol SWK. So this is an individual assignment with a write-up. So Monday's class will be talking about debriefing Stanley Black and Decker. So going into your group project, you would have had the chance to really do 3 EIC assignments. You'd have the United one, which would have been graded. You'll have the one which we're about to practice here in a minute. You'll then have the one we're going to do on Monday. We debrief Stanley Black and Decker, and then Wednesday your team is presenting for a grade on General Dynamics. So just a preview of what is up and coming. Again, questions about any of that?
Will we get feedback from our first one
United one?
before this one's due? Yeah.
Yeah, you should have the United grades later this week. And again, if you have any questions about anything, the TAs will be having office hours both tomorrow and Friday. feel free to take advantage of that in terms of not only feedback, but also help in preparing for your presentation if you want it. Because they had to do this thing last semester as well. So they can give you some guidance and experience as well. But shouldn't be any surprises. We're doing it in class. And again, we're going to practice here in just a second. Any other questions? All right. So our practice is going to be on Union Pacific, which is a railroad, and the rail industry, U.S. Rail. So ticker symbol UNP, U.S. Equity. I'm going to put you into Zoom Teams. I'm going to give you 40 minutes to discuss and work on this. After that, I'll bring you back. We'll debrief this as a class and give a chance to kind of talk through the EIC. But for now, I'm going to put you into those teams and randomly, so you're not in the same teams as your normal group, just happen to be ad hoc teams for today to work on this. And you'll be in those breakout rooms until we get back. Okay. So I will see you guys in about 40 minutes. We'll talk Union Pacific. And again, I would just have one person log into Bloomberg share on behalf of the teams. All right, welcome back from your Zoom rooms. So we want to start kind of debriefing Union Pacific Railroad. So what were some of the thoughts that your teams had? Start with the E in the EIC. What would you say about the E? Again, volunteer, you raise your hand, unmute yourself.
I can speak a little bit about the general economy and more of the spread per se. So ENP clearly did show that it operates in a attractive industry. The industry currently had a ROIC of 9.62 and a WACC of 8.50 with a spread of 1.12. Compared to the equity having a ROIC of 8.67. My apologies. The spread was 1.61. I did not clearly write down the ROIC and WACC, but it did show that it had a strong competitive advantage or relatively strong competitive advantage.
All right. So you went actually straight to the I, which is the industry, which was basically this data suggesting the positive spread, attractive industry, and the competitive advantage of Union Pacific. So the 1.05 industry spread, the 965 versus 859, and the 1.61 Union Pacific spread, 1029 minus 867, suggesting they have competitive advantage. So that's
I
correct.
mixed the E and the I. My bad.
That's okay. Had to get to it eventually. So that would be the I, and to some degree the C. So does anybody want to kind of talk about the E?
Yeah,
I can
for
tell.
the E.
Go ahead.
Go ahead, Ethan.
All right, thanks. If you go back to the beta, yeah. Their beta's it's super close to 1, which would correlate with like the general economic index. Probably because the goods that they transport are like largely like energy related and agriculture related, which all correlate with like general like overall demand. So when like the general demand for those goods go up, it's going to correlate pretty closely to the overall economy.
Yeah. So I like everything you said, with the one exception of super close to one.
Okay. If I could rephrase, it's exactly, well, when the economy goes up or down, the company goes goes up or down with it by when it
1.07.
goes up 1%, it goes up by 1.07%, which comparing to other companies and industries is a pretty close correlation, like especially comparing it back to United Airlines when they were about 2.5%.
Yeah. So I just, just use the word 1.07 as opposed to super close, to be specific. But I think what you're saying is correct, which is this industry kind of goes up and down with the economy. They're pretty close to the economy. And in a way, rail, because they're transporting goods, a lot of manufacturing and trade goods, kind of boom and bust with the economy. So in a way, it's almost like this is a predictor of what's going to happen with the economy. Because in a tougher economy, there's less trade, there's less goods moving around, less rail velocity or capacity. When there's more stuff moving around in a better economy, rails tend to do better. So essentially, they are moving up and down slightly faster, but basically with the economy. So very economically sensitive. Any other E issues that are important if we're going to understand the rail industry? About their market industry, what else kind of macro level would be important for the rail?
They're sensitive to oil and coal prices.
Okay, why?
Because I'm pretty sure I read it on the IBIS report that 30% of revenue comes from coal transport. And then their costs are pretty much directly associated, or at least in some part due to gas prices, especially because their prices are so stable. Their profit margin depends on oil prices.
Yeah, and one of the things that's happening, and this is in the BICO as well, is that energy is lower because number one, we're using less coal in general, and then again, if there's less demand for energy, then there's less movement of energy. Because one of the assumptions behind all of this is that it's a lot cheaper to move things long distance on the ground via rail than it is over truck. And I forgot the break even number, but once you get past somewhere in the 5 to 800 mile range, it just doesn't make economic sense to go by truck. And so trains start to become far more competitive. And that is something that is important to understand about the industry. As a matter of fact, this industry is seeing growth in what's called intermodal. So does anybody know what intermodal is? Another macroeconomic change in the industry.
Is intermodal competition between the different modes, or is it within? No, it's between the different modes, right?
It's actually more cooperation than competition. So think of intermodal as trucks on trains. So if it's expensive to do trucking long distance, what they're doing is they're literally double stacking the 18 wheelers on the back of the train and then moving the 18 wheelers to a distribution hub where then they drive the last 50 to 100 miles to wherever they're going. So it's really a cooperation between those two industries, and that's called intermodal. They're kind of like big terminals that they're building around the country. So that's been a shift in the rail market. Okay. So again, sensitive to economic changes. Beta of 1.07 shifts in their business away from some of the energy business. Part of it's economic, part of it is getting away from coal, moving into intermodal, which again is very sensitive to manufacturing and trade activity, which is going to be very important for the rail industry to kind of understand and keep track of. And that just kind of sets us up as we get into our I. So previously somebody had mentioned that this is an attractive industry because it has a positive spread. So in the context of the five forces, why does this industry have a slight positive spread? What about the five forces is favorable to this industry?
Professor, I can take that. For starters, we have high barriers to entry is a big factor of porters that's relevant in this industry.
All right. So why is it so hard to get in this industry? What's the barrier?
You need a lot of like capital to build the tracks for the train all over.
Yeah. Well, it's not just the capital, it's the tracks themselves. Like just getting the right of way. Like go try and lay 1,000 miles worth of track through cities today. Like no one's going to let you do it. So that kind of gives them almost a natural monopoly on the routes that have already been built, that it's hard for somebody to come in and build more rail. So that it's a huge barrier to entry beyond the capital costs. What else is favorable to the rail in the five forces?
Well, like within competition, there's only a few firms that dominate the whole market essentially, and they're all geographically centered. So for example, UNP is mostly West Coast centered. So competition among the firms, while it is stiff, each person like has their own space to operate, if that makes sense.
Yeah, these are essentially regional monopolies. I mean, this is a picture in Vico of the Union Pacific rail network. They pretty much own the West. You know, CSX is it, and Norfolk Southern East Coast rails. Union Pacific's the West Coast rail, along with Burlington Northern. But basically, they each kind of have their territories, and they're the only game in town for the most part in some of these territories. So it limits a lot of the competition, which is favorable to the industry when you're a monopoly and people have choice about which rail they want to use. One of the things that makes it not astronomical in spread is that because they're regional monopolies, they are regulated on the prices they can charge. They have to go to rate commissions and request the ability to raise price. And so the government in a way can kind of cap the prices they can charge, but these are monopolies. That's one of the reasons why they tend to focus on cost reduction as an industry. What else is favorable that explains the forces, that explains the high spread or the positive spread? So got rivalry we've covered, got barriers to entry we've covered. Any of the other forces favorable?
One thing I saw was that buyer power was like extremely low because, you know, they're giving out products to, you know, any firm that needs materials essentially. So there's pretty much like almost an infinite list of people you can sell to.
Yeah, well, there's very few railroads and a lot of buyers. So that tends to give them more power with one exception. So what's the other force that matters here?
Supplier power.
Who are the suppliers and how powerful are they?
I would say the suppliers are the people who supply them with either power or oil or coal. I'm not sure exactly what the trains run off, but those would be the suppliers.
Okay. A lot of them are commodity companies. So I'm not saying they don't have power, but probably not hurting this industry too much. I was thinking about the other force about substitutes. What about substitutes in this industry?
I know one of their largest like transported goods is oil, and so with oil, it's either like pipelines or trains, basically.
Okay. So not too many substitutes in where you're going to go. What about what are the other substitutes? Like if I got to move heavy goods long distance, what are my options?
You could probably use boats or planes are the other two.
Yeah, boats across the ocean, but within the continent, hard to do. Planes, very expensive to do heavy cargo. So I'm not saying that they aren't a substitute, but they're expensive unless it's time sensitive. And so the other one would be trucks. And as I said, trucks are efficient except for longer distances. So depends on where you're going. The substitutes for short distances, obviously important. If you go international, different type of substitute. but the long range commodity materials, it's hard to beat rail, and that's been their bread and butter for a long time. Okay. Again, what's hurting their ability to raise price too much is the fact that they're regulated because they can't completely exploit their advantage. But nonetheless, that's the kind of industry structure that explains the spread. So here's my question. Is any of that going to change in 5 years?
I honestly don't think so. I think they're making a shift now because coal demand is dropping. I think they're making a shift to other products, like you said, the trucks on trains. And one of their big selling points is just exploiting that efficiency long distance. So I think if they continue to invest in, the infrastructure to allow that to happen, I think they're in a pretty good spot. Yeah.
All right. So if we follow that logic, which there's probably not a lot of change in the 5 forces, that means that the spread in 5 years is probably going to be about what it is now, slightly positive. Value creating, not value destructing, but slightly positive, not too high. That's basically what we're inferring if we're making those assumptions. What about the C? We said based on the data, they're doing a little bit better than some of their peers. So what is the competitive advantage in Union Pacific? What makes them good?
One of the first things I noticed was that they had a significantly higher market cap than their competitors.
Okay.
So they're just huge in the industry, which helps their company.
They do have an economy of scale. So that's one thing. What else leads to their competitive advantage? And I'll give everybody a hint. Look at this map that's on my screen. I left it there for a reason. How does the map, the route map, help them?
They have the ability to ship goods all the way across country from one end to the other, which a lot of other railroad companies might only have like a specific section within the United States where they can travel from one end to the other.
Yeah, they're pretty much, they own west of the Mississippi. So think about this. Trade coming from Asia hits all the ports. Well, guess what? That's Union Pacific Railroad moving it in. Trade coming up the Gulf of Mexico hits these ports. That's Union Pacific coming on New Orleans, Houston. Everything going back and forth between Mexico and the US, Union Pacific Railroad terminates here. And then this area of Texas, Oklahoma, this is where they're doing all the fracking, middle of the Permian Basin. Well, guess what? How do you move the oil out if it's on the pipeline? As somebody said, you're going to put it on a train. So they have some kind of natural advantages. And the biggest advantage they have is this is a lot of flat, open land with not a lot of people. And so if you looked here as you're playing around, one of the things that's important is you'll notice there's some of the metrics they use: freight car velocity, train dwell, train length. They can have very long trains going really fast in those open areas, much faster than trains on the East Coast, which are going through cities, going through mountains. You don't really have all that flat land. And that gives them a little bit of an advantage because I can move the cars faster, I can move them longer, and that gives me more productivity. Just natural, advantage that Union Pacific would have over a CSX, over a Union Pacific, which is trying to move stuff through, say, a Pennsylvania or a Virginia or something like that. So again, that has been a natural advantage for them, and another reason why they slightly outperform their peers. EIC. And not much of that is going to change in the next 5 years. So when you do your presentations next week, as well as your Stanley Black & Decker homework for Monday, which is individual, again, at a minimum, you got to do the numbers, all right? You got to give me the numbers. You got to get them right. You got to use the numbers. But number two is, if you really want a good grade, you got to tell me about the companies. Like, don't just tell me they have a positive spread. Explain to me why. Give me context. You have a team, you have at least a week of time. Like you should be digging in. Look at what we can do in 20 minutes. You should be digging into these companies and understanding what's going on and why those things are happening and trying to make a relation between them. That's the better grade if you're trying to get it in your presentation. And I'll be asking next week at least one question to every team about the company that you're analyzing. So if I ask you a question about General Dynamics or aerospace, I expect you to know it. Now, I'm not going to try and get you gotcha questions, but if the company's in the news, if we're talking about major issues that have been in here, I'm reading Bloomberg too, you should have some awareness of it and be able to relate it to the context of the EIC. This is not just relating numbers. We have to go beyond that as we do our analysis. Hopefully today I gave you a little bit of sense of that. Questions about Union Pacific or what's coming up? All right, well, then no questions. We will see everybody on Monday. Don't forget homework 3 due 10 a.m., which is on Stanley Black & Decker. Have a great weekend. Remember, TAs have office hours the next 2 days. If you need help with any of this, including your group project.
Are groups assigned to us or do we choose?
For the presentation?
Correct.
Yeah, it's the same groups that are your Bloomberg trading teams. You're in that team for the whole semester.
Okay, gotcha. Thanks.
Same teams.
Thank you.
Yep. Yep.
Thank you.
Thank you.
Thank you.